Recent financial disclosures show that vice presidential nominee Tim Walz does not have any investable assets. He doesn't own any stocks, bonds, mutual funds, ETFs. They don't own residential real estate. They don't own any rental properties. So what's going on? Are they going to be okay to retire? I want to show you a little bit about Walz's situation so that you can kind of compare it to yours. And this is especially pertinent if you're somebody who relies or will be relying on Social Security and pension income and do not have much or any financial assets for retirement. My name is Scott Caulfield. I'm a CPA and a CFA charter holder and the founder of Sophos Wealth Management. And I love digging into retirement and helping people, hopefully like you, to kind of optimize your situation. So let's dig into Walz's situation here. Now, obviously, we're just going to use some estimates, and so we don't know his exact situation. But based on a 2019 disclosure he gave, we know that his net worth is probably below average. According to the Wall Street Journal's look at it, it was between $112,000 and $330,000. So even at the higher end of that net worth, he would be on the low end, or he would be below average for his age cohort. Now, what's not included in that, though, are his significant pension assets. And that's kind of the key thing about analyzing his situation. He has not been a private sector employee. He has not built his retirement through 401ks. His retirement is going to be entirely in federal pension programs. So let's kind of look at his situation and kind of guesstimate some of the numbers. So first of all, him and his spouse both being teachers and in the educational system, if we just assume they're going to have an average teacher's pension out of Minnesota, that would be about $27,000 each. So right there, we're already up to $54,000 in retirement income, thanks to those. On top of that, his time as a U.S. congressman, that's spending 12 years there. That would be a pension, I think, around $55,000. So already between those two things, we've got retirement income over $100,000. Now, if you look at the career that he and his wife have both had, I'm going to guess that their Social Security is a little bit higher than average. Maybe even not much, but let's assume $2,000 a month for each of them. So $4,000 a month as a couple, that's another almost $50,000. So between those three sources of income, we are already up to $157,000 of retirement income. Now that is pre-tax. Additionally, we haven't even touched on his time as a governor, his time in the National Guard. So those are each going to throw in a little bit of extra as well, although maybe not as material as the other sources. Even at $157,000 though, I think, relative to the income that he had during, or what I would estimate his income and what has been reported, that's probably going to be enough to fund his spending. And so likely in their scenario, they're going to be in an okay spot. Now, I don't love that situation. It would be nice to have some retirement assets, some investable assets. If the only thing you have is pension and Social Security, it's just harder to fund maybe big one-offs if you don't already have a lot in the bank. So if they wanted to fund a down payment for a house, if they already owned a house, which they don't, they sold it when he became governor. But if they did, all of a sudden, what if you got to plop out $30,000 for a new roof or $10,000 for a water heater? If all you have is that monthly pension income, it's not my favorite. And additionally, I just don't love the lack of self-sufficiency there. Lots of state pension funds are underfunded. It's not a problem now, but there's a tail risk that it could be a problem in the future. So, if he was a client, I would love to see some savings into other accounts. Now, his situation is going to be totally different in the future. Now that he's in the national spotlight, he's obviously going to be way better off financially in the future than his current situation. But you can see, just looking at his pension income, his Social Security situation, that's going to probably replace more than his average assets, or his average income, throughout his career. So there's certainly a route to retirement that works for many, and it's very old school. That's pre 401k days, it was all about company pensions and working in the same company for a long time and a little bit of Social Security. It's just not the typical route we see anymore. So hope you found this video interesting. Love it if you like, subscribe to my channel, and share it with anyone you think would benefit. Thanks a lot.